Across the world, infrastructure development is a critical enabler for productivity and sustainable economic growth. A recent African Union Office of Infrastructure statement revealed the fact that African governments need more than $90 billion worth of investment yearly to reduce the infrastructure gap we have on the continent. For Africa, the need for adequate infrastructure, secure energy, efficient transport, reliable communication systems, resilient sanitation, and affordable housing is particularly apparent and obvious. In Nigeria, there have been several initiatives designed to drive infrastructure development with varying levels of success. An alternative funding to bridge the infrastructure deficit is the Islamic financing instrument like Sukuk. The Sukuk bond, for instance, has a zero-interest framework. This means people can also benefit from Islamic finance in the area of starting a business or even buying a house. Hello and welcome to the Islamic Finance Weekly, where we discuss relevant issues on finance, business, and economy from a Sharia perspective. On today's program, we will be discussing addressing Nigeria's infrastructure and housing deficit through Islamic home financing. Joining me virtually for this conversation is my guest, Dr. Basheer Oshodi, who is currently the CEO and co-founder of TrustBanc Hato. Good morning, Dr. Basheer. It is good to see you again on the Islamic Finance Weekly.
Thank you very much. Good morning, Bukola.
Islamic finance serves as a complementary tool for providing funding that can bridge the housing deficit in Nigeria for the benefit of the citizens. Can you explain why Islamic home financing is so much better than conventional housing?
Okay, thank you very much. That's a very tough question because looking around the world, the last, since after the Second World War, a lot of Western economies have developed on the back of conventional finance, and they've developed very well. They've created housing master plans. They've regenerated the urban cities and everything, and they've done fantastically well. And apart from that, they've put in a lot of programs that allow those at the bottom of the pyramid, or the middle of the pyramid to actually get, if you like, mortgages, and own their own homes. They've created a lot of schemes. They've provided finance. They made them very cheap. They've controlled inflation. Kept it low. The cost of funds, they kept it very low. And they've created a lot of incentives. All forms of incentives, from tariffs to reduction of interest rates to even providing land at zero costs. And because they've done all of this effectively well, it's very difficult for me, especially coming from an academic background, to say that conventional finance has not helped them provide housing. So you have better housing schemes in the UK and the US today than I have in Nigeria, if you know what I'm saying. So however, I can look at it from a different perspective. To say, okay, let's look at Nigeria specifically. Okay. So in Nigeria, the banks have just not been able to support supply or demand side of real estate. Supply, I mean construction. Demand, I mean mortgages. They've not been able to supply that as such. If you look at what they put in mortgages, in the last 40 years, it's barely 1% of their total assets. It's extremely low. And so, as a percent of GDP, mortgages as a percent of GDP is just about 0.7%, which is one of the lowest in the world, and of course, the lowest in Africa. So we're not seeing a lot from that side. On the supply side, construction, what conventional banks put together, have put in construction in the last 40 years too, is very 13%. Construction includes all sorts, infrastructure, of course, bridges, warehouses, all sorts, including, of course, houses, real estate. Is also very low. So as a result of that, the real estate particularly has suffered even the most in that bracket. So let's look at international funds. International funds have got their lovely advantages. They can be long-term, but because of our predictable surprise, which is the fact that in the last 40 years also, if you look at the trend, our monies has been devalued further, by the second. There's a free fall of the naira, fortunately. And if you look at interest rate has, it's been up and down, but if you have to look at NPR and compare to inflation, NPR is just slightly below the rate of inflation, which is still very high. Now, because of all of these predictable surprises that we have, the issues of the FX, the issues around interest rates, around inflation particularly, it has made real estate to be further unattractive, to the financial sector in this part of the world, in Nigeria particularly. And so whatever affects conventional affects Islamic finance also, affects non-interest financial institutions, right? So Sukuk can be fantastic, can be lovely, but let's now look at the strengths of Sukuk itself. I want to classify into 4 main categories. Supranational, national Sukuk, national Sukuk, subnational, and of course the private Sukuk. When we talk about the supranational one, it means the Sukuk is being organized by, international organizations. Yeah, right. They have solid backing. They are strong. AAA rated. On the back of that, yes, investors will put in money very easily. So if you have the likes of them come up with Sukuk, for housing, they will buy them. In fact, the conventional banks that struggle to put money in real estate, either supply and demand side, they ordinarily put money in supranational Sukuk, because of the kind of rating of the agencies, right? And the fact that they're very strong, they are owned by multiple, entities. By entities, I mean even nations or countries, as the case may be. So that can be very strong. When you look at the national Sukuk, if you like, federal government Sukuk in our own case, it can also be very nice because the federal government will not really give its own sovereign guarantee. You say, okay, we're surely going to pay back, whichever way, most of the time. So there shouldn't be problems. If you go a little bit to the state Sukuk, subnational, and so Sukuk itself is a credit instrument, and that's what I'm going to define it, the credit. And if it's a credit, that credit must be backed. It must have certain ingredients in it that give you potency. Without those ingredients, it's just another name. So again, there must be a guarantee, a strong guarantee in place. Is there a strong guarantee in place? Is somebody underwriting it? Who is that person? What company is underwriting it? What is the strength of the trustee? The trustee we're using, and that titles, is the trustee strong? Is the SPV an operational SPV or a dummy SPV? You look at the recourse to the assets. Are you going to have recourse to the assets if there's default? Because there can be defaults. And that's why I say it's just a credit, really. And so for us as business guys, we want to make sure that the credit side is very strong. And again, if it's private, is it long term? If it's long term, you do a private Sukuk, 10 years. I think in that economy, we're not mature for that. So Sukuk or no Sukuk, federal government can do 5 years, 7 years, 10 years, no problem. But if you do a private Sukuk that is 10 years, you're going to struggle. Even for the subnational, the last one, the only one that has been done so far, based on my knowledge, about 8-9 years ago, just over, I think, 7 years, just fair enough. Now, so even Sukuk itself has its own strength, it has its own merits and demerits. So it has to be structured as a perfect, if you like, or close to perfect credit to allow investors to then be willing to put in money. They need to be satisfied. You need to have proper ratings. If you can have a unique combination of Sukuk, not too long term, you keep it short as it can be in series, maybe 3 years, like investors can be confident. You have all of these conditions, guarantees, somebody's underwriting part of it, and all of these things in place, where the credit bit is sound, where the trustees have been empowered to do a lot of they'll be operating, they'll be operational, where the SPV is then reduced to just being, a dummy company, and of course, sound corporate governance. They can start to see the effect of Sukuk, and then the volume can start to go up. It's only when we have this that you can truly have Islamic finance contributes meaningfully to real estate development in Nigeria.
Okay, thank you very much, Dr. Basheer, for sharing your insights with us on the nexus between Islamic home financing and conventional housing. And so, talking about Sukuk, we have seen the success of Sukuk in Nigeria. Even recently, the federal government approved 3 billion naira Sukuk fund for Numan Jalingo Road rehabilitation. So why is the government or key sectors players in the non-interest financial institutions finding it difficult to make Islamic home financing accessible for Nigerians?
The cost of fund is still very high, which is a function of course, government rates, like federal government rates, all of that. The cost of fund is still very high. But more importantly, more importantly, is the fact that a minimum of 50 million adult Nigerians are doing nothing. They don't have jobs, they're not earning any money at all. So even if they want to buy houses, they won't be able to buy it. Another 30 million are working in government and small firms, normal businesses. They also struggle because the banks ordinarily don't give them facilities. So and of course, don't forget that. So whether you want Islamic or conventional, the same fate awaits you. On the one hand, you don't have a proper source of income. On the other hand, where you have the source of income, the income is too little. Because it's too little, it's almost impossible for the financial institution to approve that you'll be giving home finance facilities under Islamic finance, or even the mortgage under the conventional finance space. And so I know there'll be questions around what can be done. Countries have affected this, looking at it from supply and demand side, right? Another lovely scheme I want to talk about is maybe the help to buy scheme, where government is going to say, okay, you know what, if you have just 5% at least, put it down. If you put this 5% down, we can help you put down the remaining contribution as your equity. And then the bulk of it sits with another institution. Also government sometime. Now, when you have, again, are we going to wait for government to do this, or will players come together, conventional and Islamic, of course, come together to package all of this, mold it in a fashion that then allows people to buy. So people can then go for the choices that they like. I don't want to go for the conventional, or they're going to go for the non-interest finance one. Until these things are done, you're not going to see any meaningful result in a very long time to come.
So now, for related based reasons, some people can't even afford to buy a house or a mortgage housing schemes. How can we increase access to Sharia-compliant loan products in Nigeria?
Amazingly, in the US, way back, they had these challenges. And so in 1938 or so, they created the Federal National Mortgage Association, which is basically called FADME. And that was because people couldn't buy their houses. Those that could buy houses were those that could pay outrightly, drop all the money. That's not going to happen. Even for bankers, you see a house that you like, can't drop all the money. Where's it going to come from? So in other words, a few people will be able to do that, but most people will be able to do that. Now, so going back to your question, how do we increase that? Even if the capital world banks increase aggressively, like I mentioned to you, only 1% has gone to home finance, and only barely 30% has gone to construction. So what that means is even where their capital increases so much, they still reluctantly want to invest or allow mortgages. So we need a refinancing scheme that works, and that's why I gave example of Fannie Mae. And of course, in 1970.
Financing requirement is one of the major problems facing housing mortgages or even Islamic housing.
Yeah, don't also forget that in as much as financial institutions want to support this sector, they also want to exist as an institution. They don't want to collapse. So for them not to collapse, it means that they need to also be conscious of the underwriting standard. About 3-4 years ago, we did the underwriting standard, under NMRC. We did for formal and informal sector. We did for conventional, we did for non-interest finance. And so the formal sector means that you have a proper job, rich income, no problem, requirements are there. For the informal sector, yes, the policy has been done, right? But has it been used? Am I going to give a facility to someone that does not have a proper source of income? And that's why I'm saying that there needs to be incentives. And what has happened well, even in more advanced economies, regardless of what mode of finance they use, is the fact that there are loads of incentives to allow people get their own homes. And again, like I mentioned earlier on, let me use typical language now. Interest rate incentives on both supply and demand side, tariffs, taxes. And again, I know in the case of Lagos State, for example, in last about 15 years ago, it has reduced the cost of concern and all of that. Can it be, if you want to do a search in the UK, for example, do it in one day, property search, you're done. In one day, get all your data. Can all of those things happen, in a good time? Yeah, again, you need to also encourage the private players to play a major role. But again, they will have to follow the rules in terms of making sure that it's fully secure. But more importantly, and very interestingly, and that's the part I think I like the most, is to have a strong guarantor in place Where it can even be a local bank, it can be a local Nigerian bank, one of the top banks. If you have a strong guarantor in place, people will then buy into the scope, and the people they can expand. But don't forget, there has to be the supply and the demand side. So while on the one hand, you are creating supply, which is that's what we do all the time. So you have a lot of houses that are empty still, right? While you're creating supply on the one hand, on the other hand, you're creating a sukuk, right, that funds demand. Well, like I explained earlier on, buy-to-let scheme you have in the UK, and say the help to buy scheme you have in the UK, for example, and maybe the support mortgages, right? So if you have just supply side, you're constructing the houses, you're trying to make them affordable, but you don't have a scheme. I know the PPP model works, but it does not work effectively well. It's got its own demerits, and of course its own merits too. So that combination is what is expressed. So if you look at, again, I like the case of Fannie Mae a lot. If you look at Fannie Mae, for example, 30 years after it was created in 1936, they privatized it and allowed private players to come in, but they were able to go to banks, first and foremost. They're able to go to loans, and other credit unions, and all of these, mortgage banks, small entities. They buy their mortgages in bulk, so they can have cash back to create more, and they, of course, they have reduced interest rates so that they can create mortgages at a much cheaper price, which is what we've not yet done. Yeah, I'm aware that we have an institution that does that. We're trying. So let me quickly take you back before your last question to say Freddie Mac. Freddie Mac today, for you to know that it's serious business, they've got more than 7,000 people working there right now. But more importantly, we're talking about a balance sheet of about asset size of about 2 trillion, 2018. That is the size we're talking about. The combination of incentives, private and public sector coming in to ensure that this problem is solved, so people can have more units. So again, if these policies are not in place, or we don't create unique and different kind of structures or sukuk, we're only going to be exciting ourselves that, we have a lot of sukuk in the country, and the sukuk that are doing very well, but it's not going to solve the problem, the desired problem that I want to solve. Yeah.
Thank you so much, Dr. Basheer. You've talked about the necessary steps to take to achieve this housing deficit in Nigeria through Islamic financing instruments. But how do we intensify efforts to sensitize the public and policymakers on the value of Islamic finance and the mortgage products they can use?
I want to drive it down quickly to South Korea. I love the South Korean model so much, and I'm aware that that's the model that Rwanda is using at this time. And so Rwanda is looking like a top African country now in terms of stability and everything. In South Korea, they simply set up what we call embedded autonomy, according to Peter Evans in his lovely book, called Embedded Autonomy, right? And of course, they learned that quickly from the Japanese, right, where they created a team of the best minds. Not just the best minds, but the best minds were also to implement the policies. Right. So on the one hand, you create the policy, the same group implements the policies based on the program that they have set out. And so they could put up a design and say, we need to sell, for example, let's use housing. We need to create X number of housing every year. This is where we're going to get the money from. These are the incentives we need to get the money. These are the people that buy the money. If they cannot buy, these are the other programs we're going to have in place to make them buy it. Until you have that unique, if you like, I also call it a cooperative inquiry. Until you have that, you're not going to have serious implementation. So on the one hand, you're going to have good policies sitting down somewhere in the shelves, right, which we have a lot in this part of the country or this part of the world. And then you then see a gap, what we call coordination gap between the policy and implementation. Yes, so you have good policies, but can you implement? What can't you implement? What are the bottlenecks that's not allowing you to implement them? So this for me will then become very important. What we'll call a coordination gap between market and the states, and of course the people, and if you like, the values of the people. the values that they want. So the value basically is for you to have your own house. You know, the gap in government. What are the gaps? This team will identify the gaps. You know, the markets. You know, what are the things they need to do differently? You know, to support. Yes, they know what they need to do, but they just can't do it because, you know, it can even hurt them and it can collapse their business if they're not careful. I'm not going to give a 20-year facility to somewhere that wants a house. I mean, the guy is already 50 years old. He wants to buy the house 50 million naira. He's in safe banking. They're going to probably ask him to leave work in the next 5 years. Hey, it's not going to happen. But I think government, how much is he earning? 100,000 naira a month. He wants to buy a house that's 10 million naira. You know, that's even the corridor or something. So the issue needs to be diagnosed perfectly well. And again, I always subscribe to a team of the best minds, you know, belonging to different related fields, as the case may be, to come up with the implementation of this policy. Again, it doesn't have to be national. It can be state, it can be local governments, you know. You don't need to wait until the government sets up this big body and everybody will go to Abuja, you know, and take a lot of time doing these things. It means every state can have its own unique embedded autonomy that will create the policies and implement the policies through a defined plan. It can be a 10-year plan. I can renew it, but it doesn't have to be national at all. Yeah.
All right, Dr. Basheer Oshodi, thank you so much for sharing your perspective with us on today's program, addressing the infrastructure housing deficit in Nigeria through non-interest finance. We appreciate your intervention and do have a lovely day.
Thank you very much. Okay. Bye-bye.
With a housing deficit of over 20 million in Nigeria, Islamic Home Financing provides immense opportunities for addressing the huge gap in the country. This brings to the fore the need for an enabling policy and regulatory environment that encourages the adoption of Islamic home financing products or mortgages that can address the needs of the various classes of citizens in the country. It will also unlock more opportunities in the construction sector, which is one of the strategic ways to address unemployment. And that will be all for this edition of the Islamic Finance Weekly. You can follow our social media platforms displaying on the screen, and also log on to our website www.proshare.co to read our news stories, articles, and watch our videos. Till we come your way again, thank you for watching and have a lovely day.